Good afternoon. I'm Brent Wilsey. With me is Chase Wilsey. We're from Wilsey Asset Management, and welcome to today's edition of the Smart Investing Daily Briefing. Well, today we're talking about hedge fund investing. You may have heard the term, but don't really understand what it is and so forth. Well, people think hedge funds just came out recently. Well, that's not the case. The first in the late 40s. But what's surprising is the hedge funds initially were supposed to hedge your performance, but over the years they become more of not a hedge, but more of a high risk, high return type investment.
Oh, it's very interesting. A lot of these hedge fund managers, because they're doing so much, they're doing all these types of trading, the fees are astronomically high. As you can see, there's a 2% management fee plus 20% of the gains you make. That's a lot of money. So I mean, looking at the past returns, so they look okay. As you can see, the 20-year return, roughly about 8.6% for the average on the index for hedge funds. But I will point out, there's a lot of hedge fund managers right now that are struggling.
And I'm thinking, why are we charging half of these guys? I won't say what our performance is, but I often wonder that. But I just can't charge this. It just drives me crazy why they charge it. And the performance is, again, 8.6% over 20 years. Anyways, let's move on to the company that we'll talk about. Boston Beer, symbol SAM. Current price around 164, the high 260, the low for the year 145. Do want to point out in 2015 it went up to about $315 a share. Let's look at the company's numbers now because I got very excited about this, saying, wow, it's come down a lot from over 300. Maybe it's time to buy this company. Well, again, the company is a Boston Beer company. Their products include Sam Adams, Twisted Tea, which I didn't know is an alcoholic tea, you said, which I've never heard of that, and then Angry Orchard Cider. So they have some different products besides just the beer. Sales looking okay. I mean, 3.3% year over year. Earnings falling 4.3%. Maybe this is why it's falling from 300 down to the current levels.
I don't know if it's not a West Coast thing or I just not my target mark, but I've actually never heard of the Twisted Tea either. But looking at the balance sheet looks good. As you can see, current ratio here 1.8, and debt to equity, essentially no debt on the balance sheet, as their debt to equity is 0.11%. I did want to point this out. Price to tangible book value 4.9. It was about in line with the industry average, but we've taken a look at companies like Budweiser that was acquired by InBev and Brown-Forman. They have no price to tangible book value. I was happy to see a price to tangible book value here. Getting the target sell price, the most important thing that we always take a look at going out to December 2017, estimated earnings per share on a GAAP basis, $7.16, gives you a target sell price of $118.14. So even with that huge decline, still would not be on our buy list.
Yeah, I was very disappointed to see this. And some people make that mistake. They think, oh, it's gone from 300 to 160, 170. Must be a buy. No, you got to check those numbers because it's still kind of pricey. So, well, I hope you enjoyed this edition of the Smart Investing Daily Briefing. If you'd like a free report on the 5 big mistakes investors make,
give us a call here at the office. Number is 858-546-4306, or go to our website, smartinvesting2000.com.